Hi, Warriors. Am I late by a minute? No, I'm not. You know what? I always feel like if I'm on time, I'm late. How about you guys? It's a Chicago thing. And I was thinking about this. I mean, who's here with me on the team? Stell and Grega's here today. Kman's here today. And we're all here to make pips and make money. And they say, money can't buy you happiness. But for sure, happiness can't buy you money. Okay? Just want to let you know that. How you doing, AJ? Scott, you guys know that.
Money can't buy you happiness, but I'd rather cry in a Ferrari.
That's another good one. Yeah, well, happiness can't buy you money. So anyway, hi, Scott and Bran. I'm sorry you didn't sleep. James came in. You have to stop trading all those micro lots, keeping you up at night. Mike Bergman, RC. Oh, there's a new handle. Hi, Stefano. Leonardo. Guy must be Swiss. No, I'm kidding. Michael Bergen and RC and Glenn's around. I feel like Romper Room when I do this. RJP. Uh, okay, Jean Francois Ingmar, Andrew Pert. Yeah. Hey, guys. Okay. So let me just stop the share and share this. Whoops. What happened? Stop share. Get rid of this. Sorry.
And
Okay.
we've got Dale today on the interview. He's a really great guy.
Oh yeah, Dale Briscoe's going to be
Yeah.
with us. So I was looking at this cable here and it's almost like a little three drive formation. I think it's vulnerable. I'm not bullish euro pound, but I could see another pop coming, something like this, maybe from here. Um, this reading's not so great, so maybe cable leads the way on a dollar rally. Um, let's see, Aussie still moving sideways, not giving you much, and gold. It didn't work yesterday, but I tried it again. Already took out $7.50 on it. See what happens on this, see how we broke out. And Grega's the perfect guy to have here. That if this was a wave four triangle, um, it sure was a small thrust out of it. But let me bring you in on this, Grega.
Yep,
I
I'm
think
here.
I
Hey.
think hey buddy, so I think you were calling this a four when we peaked up here. We
Yeah.
finished three and this was a four. And does this look like a wave four triangle and then the terminal thrust would come out of gold here?
Yeah, could be a triangle, not ideal one. I think that market could actually be a bit more slow till we get more details from the latest Fed meetings. But overall, I just think that sooner or later we could see a jump towards 3,000. But even if we see some retracement from here, I would still be looking for some support around 2,900. So
Okay.
I just think that we either consolidate a bit further, but still, it looks like that we are just in a breather before we get another push higher, a stronger one.
Okay. I know a lot of people talking 3,200. Do you have any different view on silver, which is not making a new
Possibly,
high yet?
I mean, possibly now we see this wave B rally that you're
Yeah,
watching this intraday wave structure. So
right.
I think that much better support to join this trend should be around 31 or 31.50 around there, where you also have some small spike from a few days back or from last week actually. So that area could represent the support for upcoming C wave if we get this another dip there.
Okay. That's interesting. I'll let you share and show your charts. The last thing I want to ask you is I think yesterday was kind of a key day because this was a breakout line. And, I never believe them till I see if there's rejections or movement off them. But I mean, it went right to the line before it turned late session. Um, where are you at on these? Still 64 as long as we hold 61?
Yeah, and I think that this level, this spike from yesterday, which occurred at the end of the session, the last
Yeah,
2 hours or so, right?
yeah,
I think that's a pretty key level. We bounced very nicely. We even closed higher, so it will be a very important day to see if we get a continuation higher, and if we break this recent swing high that you have here on futures. I just think that there is a real chance that we are finally really breaking out there. So
okay,
I'm with you there. I just think that we are coming out of this very big triangle, but this
yeah,
trend line is key support definitely.
okay. So everyone, we know a level. If you did nothing, one thing that will tell you that there might be something or at least a deeper correction underway would be to take out yesterday's low. So write it down or put an alarm there. Okay, Greg, I'm going to give you the charts. I'm sure you had other things in mind you wanted to talk about. So there you
Yeah.
go. Oh, Dale to Dale day. So when I talk to Dale, um, it's like talking to myself, and when Dale answers, he's answering to himself. Dale Briscoe. So anyway, go ahead, buddy. Share.
Yeah, I'm just picking one of my screens.
Oh, all right. So okay, crude. Nice
No,
one.
actually, I will take a look on
Oh,
the S&P 500
all
since you
right.
mentioned. So basically, we got a pretty nice recovery yesterday, as I said, after the close, and it
Yeah.
was very interesting. Here we are looking at the cash market, right? So it's a
Right.
slightly different picture, but it was very interesting support. I also noted on and shared some charts on Twitter as well, because here at the final hours of the US session, that's basically when the S&P 500 retested these lows
Yeah.
from last February, from Friday,
Yeah.
February 11th. So it was a very nice retest and rebound. So I thought myself that, okay, since we cleared some stops down here, right at your trend line that you also mentioned, and we closed higher, it was a
Yeah.
very nice indication that we could actually push prices even further. And if we look now at the 4 hour time frame, we could be looking for a potential push out into this fifth wave. We're still
Yeah.
maybe missing this final break above this key resistance here, the swing area around 61.65. But I think that there is a chance that we will see a push higher maybe this week. But if you look on the cross other markets, we are basically still somehow sideways. If you look on the FX dollar pairs, basically they are very, very slow. So we certainly need some volatility here on the upside or momentum so that other FX pairs could possibly start breaking out of these current ranges that we are seeing.
Yeah. Is it a little confusing to you right now with no downside follow through? In fact, I saw an interpretation that this recent decline in the Dixie was only 3 waves.
I mean, for
So
now,
far, so far.
yeah, so far, as you said, it's in 3 waves.
Yeah.
But if you and try to focus on the substructures of this
Yeah.
third leg, even if
Yeah.
it's in 3 waves, we still don't have this completed decline here.
Okay.
So even a drop from that 78.6% from 109.30 should be
Yeah.
made by 5 subways before we may say that we are bottoming for wave C and we are turning back to the upside. So I still
Okay.
think that even if this whole cycle is corrective from January highs, we still have
Yeah.
some incomplete downside here. So
Okay.
I think
Yeah.
that there is a chance that as if stocks would really push that through that levels on the S&P 500, that maybe this one could then be a trigger for dollar
For
index
a
to
weaker
drop.
dollar. Yeah, a
Yeah,
little tailwind.
yeah.
Yields popped yesterday. Still showed a uptrend line that it was holding. I think it was a 10-year, wasn't it, Stell? And
It was, yes.
yeah, okay,
I'll show it in a bit when Grega is done.
okay.
Yeah,
So
I'm looking at 10-year as well here. and we retested this trend line from the outside around to
Yeah.
109.30.
Yeah.
So still, this maybe explains why dollar pairs are trading sideways, neutral.
Yeah. Yeah.
But I still think that in first quarter we could see much higher prices, and that this bottom could be in. But of course, if we break this swing resistance, that would be my confirmation that we are recovering. Overall, I still think that the yields will come to the downside, and a bigger recovery or trends or change in cycles will happen here, and this will obviously have impact on the dollar.
Okay. I was hearing one more low into March because momentum wasn't so good at 5 down there. It was like, under 30, like 20. So that could be tested out again. Could you see us having not completed 5 and this bounce could
To
be
be
a
a wave
4 and
four,
then
yes,
yeah, yeah.
or maybe even some kind of a wedge formation could also be still
And
here ongoing, and we
oh,
retest the lows. That
yeah,
would be also be possible.
ending
Uh,
diagonal.
yeah, not the perfect shape, but yes, I still think that even if we see a drop here, that there would be a reversal, but just a bit later this
Okay.
year in such case.
Okay. So
Maybe it's also good to look at crude oil, as we also discussed last time about crude oil. So I still think that this one will possibly will reach lower prices. We know that there are some negotiations to end the war between Ukraine and Russia, and market so far is not really picking up its any kind of a real direction yet. But looks like that we are here in a correction. I think that that's a wave B, and that we could revisit these lower prices, the lower side of the very big range, around $65-$67. I think that's a pretty strong level. So in the near future, I would expect a completion of this wave B, and then possibly looking for a break to the downside, maybe already by the end of February. And I would be expecting lower energy prices, and this could maybe help to bring down the US yields as well with the US
okay.
dollar.
Okay, so let's assume that happens. We get down there. I've been waiting for about $62 for a long time. It's a weekly line I have. It's kind of a down slanting line, but you have it completing there. Could we expect a big rally from there? Oh, okay, just back.
Yeah,
Yeah.
just
Okay.
temporary.
All right.
My big picture suggests that we could be headed below $60 this year, but not sure if
Okay.
this will be in straight line from here. But certainly looks like that each rally is reversed quite significantly. So it's just a matter of time when we break finally these key support levels.
Okay.
And we know that Trump administration favors the move to the downside, and if negotiations will be successful, of course, it will be much easier for crude oil to follow this line lower.
Yeah. Do you have much hope for this to be successful, these negotiations?
I mean, it's like a ping pong. I'm not really sure there will be
Yeah.
any kind of solution. So this will most likely just stay in the range for a longer period, and we still have this incomplete triangle, and then maybe this would make sense.
Yeah, well, I must have been watching fake news because I thought Russia invaded Ukraine, but I'm hearing that they started the war. Anyway, anything else that you want to? Oh,
Yeah, last
NVIDIA?
time
Okay.
we discussed about Nvidia.
Yeah, yeah,
Yeah, we said that we most likely going to fill the gap. This
yeah, great call.
happened recently. So now with these gaps, whenever they are filled, new reversals can show up, and possibly we will get some setback for a wave B retracement. But overall, I just think that once we have some posts here, we could see a new push higher. Of course, watch out earnings. Uh,
Yeah, when is it?
uh, February 26th,
Next week. Okay.
next week. Yeah, so maybe this could slow down speculators a bit from risking too much here, and maybe we get this setback.
I accidentally saw that chart. I'm not sure if it was on LinkedIn or on X, and I had sold that first rally. Well, I caught the collapse with deep six, and then I sold the first rally, and to about 35 was my number. And when I saw this chart, I got out late last week, BE, um, because of this chart, and so I could have someone to blame if it went without me. But
Yeah, but
it's
overall,
you saved me some money, Grega.
yeah, I mean, it will be a very big question what will happen whenever we see this fifth wave coming, because we know that ending diagonals,
Yeah,
whenever
yeah,
they are finished,
yeah,
market
there,
can do a very sharp
yeah.
reversal, and we know how investors will get excited whenever we print new highs here. So
You know,
be careful.
yeah, I'm kind of thinking. I know you don't measure time, but do you have any idea? Do you think about it mentally, like, the S&P completing to 6,400 and NVIDIA completing wave five down the road? Is this like about a 2 month process, you think?
Yeah, I think by June we could see a new high, could be a new highs for a fifth wave
Okay.
in late
So,
stages.
okay. All right, June. Why June? How do you come up with that?
Why June? Because I can see I can see in what kind of a period we are right now. We are
Yeah.
in consolidation since December, actually. So I think that the next period is break out of consolidation, and then we get a slow summer.
Okay. All right. I don't know about that, but I don't think things are slow for 4 years. Isn't that great? It's great. All right. So anyway, nice looks like usual.
Thanks,
All
Nate.
right. All right. Grega, and you can get Grega's work on our website. It's there's so many great traders, but it's certainly a benefit to have one of the best Elliott Wave practitioners on the team to keep us straight. This NVIDIA example isn't the first time that, Grega's work. I don't like to fade him. Fade him at your own peril. He's not perfect, but he's a top gun. And why don't we bring someone else in who's not perfect? Who else on our team wants to admit they're not perfect?
Well, definitely, I'm not perfect. I can take the
Uh,
screen for a couple of minutes.
okay, go ahead. Talk real fast.
No, no, I don't have much to say different to yesterday, but I'm
Okay.
going to go over a couple of things. So this is the trend line we're talking about in the
Yeah,
10-year, and that's
yeah.
held. So for now, it looks like we may be heading a little bit higher. My view still remains that yields are going to resolve to the downside on the the next move is going to be the downside. I think we're going to eventually see much higher yields, but I think the next move will be lower. Um, and Grega talked about quite a few things. I do agree about oil. We've been talking about this for ages, and we are very close to this really important support zone. Well, not very close, but we're a few bucks away, and I think that this also will resolve the downside, as will the dollar. And but the currency that interests me most at the moment, the pair, is euro pound. If you recall, yesterday we got average earnings plus bonus in the UK came in half a percentage point higher than expected at 6% year on year. And the inflation today, CPI year on year, came in half a percent higher at 3% year on year. So this is why we are seeing a little bit of a bounce in UK yields. And this is giving it a bit of a strength to the pound. But overall, I think this zone here is very strong, and it's been tested for years and years. And if we get close to the bottom here, I think I'm going to take a long with a pretty tight stop on this. But
Wait
this
a
is
bit,
definitely
wait a bit, wait a bit still.
wait a bit.
Good morning.
First, go break below, then take everybody out, retest, and then we go higher. What do you think?
I'm still short, so wait a bit before.
Ah, you're short. Okay, oh, you give me the signal.
Yeah, wait for me
Um,
to buy mine back, please.
yeah, okay, fine. Um, Gold, I mean, what can we say about gold? It's still going higher, and I see all these price projections, and when you're at all-time highs, it's very difficult make projections on where resistance is going to be. I mean, there is this trend line, but I mean, it's been non-stop. I think we will get a pullback at some point, but I think you can bet that there's going to be loads of buyers waiting for that pullback. Anywhere near this previous high, 27.90 or wherever
Yeah,
that was, I think
good
that will
area.
be a very nice spot. I don't think we should be chasing it, but yeah, but I think if you're looking to get long, a dip towards that level is probably not bad. Silver is looking a little bit better. It's trying to head back towards those highs from a few days ago. For people who have been following or who are Forex Analytics subscribers, they know that I have a core long from 23.10. It's a long way below, and I have another one from 32.42 from last Friday. So that's going okay. And I think, there's a big test here at 33.40, whatever you want to call that. But silver is trying to play catch up. It's not really doing very well. The gold silver ratio is still close to 90, and there's some kind of resistance up here, which is tried a couple of times to break. But as long as the ratio is up there, I will always prefer silver to gold. Even though buying is driven by gold at the moment, it has been for months now due to central bank buying, etc. The other one, which I really like, and I do have a piece on, it's a little bit in the money, not a lot, is platinum, and there is a macro thesis behind this, which is talked about this before. Number one use of platinum is in catalytic converters, and the market was convinced up until very recently that cars are going to be electric only going forward. And I think we're seeing lots of data suggesting that internal combustion engine cars are here to stay for quite a bit longer. I think eventually they're going to die out, but I don't think I'll be alive to see that. So I really, really like platinum, and if you look at the ratio uh, to um, to silver, we are at the lows basically. I mean, really, really all-time lows, and I like this. I like silver more than gold, and I like platinum even more than silver. So those are the two that I have, and I'll be looking to add more to platinum, but it needs to make a move and break above, let's say, 1055 or whatever that's going to come on this trend line. So patience required, but I really, really like those two metals, and I am trading them on the long side. Didn't really have much to add because I went through a few more things yesterday. So if Kay or whoever else wants to take a shot at the screen, you are my guest.
Mine is expensive, so I'm not going to take a shot at it.
Okay, you are always expensive, Steve.
Dale, what do you want me to do? Or Steve, do you want to say anything? Or shall I take it? What do you want to do, Dale?
It's up to you, Kay.
It's
You want to take it?
No,
I
Dale.
mean, go ahead. Grab the screen, bro.
Okay, just a quick.
What's your target? What's your target in euro pound on the downside?
82, low 82s is going to be massive.
Okay.
Massive. But I just want to show something on the S&P. If you just this one here, it's a relatively short-term line, but we are kind of respecting it right now. This is from the high of December over the high of January, and we are turning around on the S&P. So I think maybe very short term decision time whether we break higher or come back down just a little bit. But I mean the channel is still intact. That thing still looks to go higher. And I see your 64 right up there, Dale.
Yeah.
This is an extension as well. Gold is
Your top trend line would be at 64 too on your chart.
I
If you
guess so, yeah.
extended it out. Yeah.
The gold, we spoke about it, but we are on the 1618 extension of this move back down here, October, November. So that is just a small level that we can hang on to. We are turning around and the top end of this channel right now. For now, I don't see any reason for this to really materially come down. It's still a hedge against all bad things in the world. That is how I look at things. If you want, this euro sterling, okay. You've got a bit of a mix here between the short term breaking down. We are still in a downwards channel, but then we can see on the longer term, and I'm going to show something else. The longer term is really massive down in the low 82s, even going back longer. But look at what we have done. I've said this a while ago, right? Look at the move July, September of last year, and look at the move we are doing now. I mean, how much more of a perfect overlay can we expect, right?
Yeah.
And this is actually doing exactly the same at a slightly lower level, which keeps the downward path still intact for me, but it's going to be a massive, massive battle. Low 82s, where I'll be very happy to take profit and perhaps even try the other side just because of the level. One of the reasons why it's still here is not so much the sterling strength, but I think it's still the euro weakness. There's a lot of efforts being made by US, Russia to keep Europe out of the loop, unless having to spend massively on defense regarding the situation in Ukraine, and I think it's a part of the weight on the euro's shoulders right now, and sterling, the UK being perhaps that little bit closer to the US, kneeling in front of the king, is one of the reasons why I think this euro sterling is still being pretty heavy. But yeah, and I mean it can bounce, but for as long as we stay, I think short term below 83 and a quarter, it's still very much oriented to the downside.
Do you think, Kay, that the German election
Yeah, the
could
German
have an
election coming.
impact on euro prices?
I think it can, but we need to, and to be fairly honest with you, I'm not going to pronounce myself on the impact that it has. But we can see an overall, if the AFD, for instance, becomes, not sure that anyone will want to really rule with them or govern with them, but we see this shift in Europe to the right-hand side, to the right side, right?
Yeah.
And I'm not sure whether that could somewhere impact the euro going forward. There was an interesting comment by Le Pen, and a bit surprising actually, that she wants to make France great again, but without Trump's help. And that was a bit of a surprising one for coming from a right-wing politician.
Yeah.
She is. She wants to get away a bit from what her father, the image that her father gave.
Yeah.
So it is somewhere understandable that she gives these kind of comments, but still, it's a very far right wing. So I guess yeah, this whole shift to the right should somewhere have an impact. But you know, whether it's right or left, fiscal policies nowadays are not really much different one from each other, right?
Yeah.
So
Yeah, they're
yeah.
all crazy.
So sorry, Steve.
All fiscal policies are more or less crazy.
Yeah, but I mean, until something blows up, they
Oh
can.
yeah, that's always the case until something blows up.
Yeah, but I mean, it will. But when? And that's always
Oh
the
yeah,
question.
yeah, yeah. It's a matter
And
of
for
when, not
as long as
if.
it doesn't, and that I think is one of the reasons why S&P is where it is, and on the other side, gold is where it is. Money has to be put to work. So you put your money to work for as long as the situation is not completely deteriorating, but you hedge, and that is the case of the gold, I guess. You hedge to against bad things as well. So that's somewhere the funny correlations that we see right now in markets, because usually gold is not really the one that you would be screaming to buy if all goes well on the equity side.
Before we bring Dale in, we have some unfinished business. Jane works very hard behind the scenes. She's, was a member well before she started. It was her birthday this weekend.
Oh,
Jane, I
happy
know you're
birthday.
here.
Oh,
Happy
happy birthday, Jane.
birthday to you. Happy birthday to you. Happy birthday, dear Jane. Happy birthday to you. And my out-of-tune guitar.
While you're singing, we got housing starts.
Oh, who cares?
U.S. housing starts, which came in a lot weaker than the previous number. The previous number was at 1.5 million. This one came in at 1.36, 37 million, more or less. That's a minus 9.8 month on month, with the previous one being a positive 15.8.
So again, the supply issue, but there is a shift happening in the real estate market here in California, across the U.S. In fact, like for example, in California, normally in January, you'd see listings up 0.7% year on year. This year they were up 20%, and homeowners are starting to get realistic that Zillow's estimates aren't the market. So Melody Wright came in and said that by this spring, people would know that the housing bull market is over. So just, something to think about if you own one, especially if you own a lot of properties. So smart lady. All right, you can't see the button to join yet, Dale? It's because I'm sending you a promote to panelists, and all you have to do is accept it. There you go. There's the button. So Steve, thanks. Stell,
Thank you,
thanks.
Dale. Enjoy the interview.
And
Cheers, guys.
Grega, thanks for dropping by, and Kman. I love your charts. So
Thank you. Have a good interview.
keep them coming. Dale Briscoe, welcome back, buddy.
Morning, how are you?
Good, good. Happy New Year. I know it's a little late, but still early in the year.
Happy
So,
Valentine's.
oh, okay. I love you. And here we are. I mean, it's been, I don't know, a month or so since President Trump took office and has the red wave or the new administration changed your narratives in the market? Because it's definitely, there are many changes happening here domestically and geo-wise from this election, this red wave.
Yeah, no, I don't think it's really changed my narrative very much. Let me just share my screen with you.
Okay.
Can you see me?
Yeah.
Okay, cool. So, look, I think every time that I've been on in the last, I don't know, probably over 12 months now, the narrative really hasn't changed much at all. I mean, we can come on to Trump and Trumponomics again if you want, but let's just focus on the basics, which is, my opinion on politicians and central bankers. They all need to be taken out back to the woodshed because they just make life more complicated for everybody. The Fed are currently in a rate cutting cycle, which is both unnecessary and completely misguided. And I think at some point in the future, we'll look back and we'll say that was a huge policy error. The reason why they're cutting rates is because they have this bee in their bonnet about the economy and growth. But there's nothing wrong with the economy and growth, right? We've got the Fed minutes tonight, and I think you'll still see a fairly dovish Fed policy stance, but I think it's completely misguided.
Okay, so he's making the same mistakes as in the 70s, where there were 3 rounds of inflation. So we went through round 1, and now round 2 is beginning.
So I'll come. That's a great point. I'll come on to that in a second. There is an analogy with the 70s. So my point being, there's nothing wrong with GDP, real GDP at 2.5%. The unemployment rate is 4%, and the jobs market is strong. Average hourly earnings headed higher. Retail sales headed higher. Consumer sentiment headed higher. Leading economic index headed higher. Composite lead indicator headed higher. What they need to be more concerned about, apart from growth, is inflation expectations. And you can look at the time frames on the bottom of the chart, right? We are not far away from having the highest inflation expectations in 44 years. This is a problem. And the longer term inflation expectations, this is the U of Mitch 5-year inflation expectations, again, were a fraction. We're a couple of 0.1s away from a 30-year high in inflation expectations. This is the issue that they need to be focusing on, and they're not. And I think I've shown you this chart before, which is one of my favorite charts, which is the core CPI going back 60 odd years. They tried to keep the balloon underwater with this nonsensical 2 to 2.5% inflation rate target, and held rates too low for too long. And worse than that, they goosed the balance sheet by trillions and trillions of dollars. And then they didn't withdraw it quickly enough after 2020, 2021. So the issue now is, once inflation gets embedded into the system, it does not go away easily. And to mark your point, Dale, about the 60s and 70s, if we go back and we look back, this is a 100-year chart of US 10-year yields. If you see this little blue box here, that's basically the late 60s to the late 70s. And that period of time was characterized by a large federal budget deficit, which was financed by monetary policy. And you've effectively got that now. You've got a Fed, or had a Fed, focused on growth and not inflation, and completely took their eye off the ball. And then you had some exogenous shocks, like the oil price spikes. And that led to inflation expectations rising dramatically. And what you then had was a period of massive inflation and a massive rise in bond yields. And you can see from late 60s to the late 70s, I mean, I'm not even taking into account the peak in the early 80s when inflation peaked out. Bond yields rose, basically doubled from 5.5 to nearly 10.5. And during that period of time, the dollar actually fell 30%. So it was a fairly unique investing environment. And I think we could be about to see that again. In fact, we are seeing some of that now. And I've said this for 4 years now.
Are you bearish as dollar now, Dale?
For the coming months, I am, yes. And I'll come on to that in a second, Dale. So I've said this for 4 years, and people think I'm nuts, or did think I'm nuts, less so now. I think you can see 10-year yields in the next several years at 6.5%, 7%, 8% easily. And I think that you need to bear this. This is how I run my investment portfolios. It is with a longer term view on what is happening in the world. And inflation and rates are the key drivers of markets, right? They're the biggest markets. They drive everything else. It's where do you want to put your money in that sort of environment? And it's not just confined to the US, right? I can show you. This is Eurozone inflation expectations. The ECB have basically been cutting rates and are fairly dovish. But guess what? Inflation's about to pick up again in the Eurozone. So that could support the euro. And coming back to your point about the dollar, I think just take off the, come down to a different time frame here, because this is very long term. if you look at the Trump's first term back here from beginning of 2017, the dollar was weak for about a year or so, more than a year. When Biden was in power, the first part of his presidency, you saw the dollar getting a lot stronger. Trump's already come out and said he doesn't like a strong dollar, and that's going to be a policy focus. So for me, I think we're in the early stages of a move down in the dollar, but not necessarily for very, very long term. I'm talking now, 5-10 years. I still think the dollar is, the world's reserve currency and probably will continue to be that way. So ultimately, the dollar will win out. But you've got a period now where you could see some dollar weakness.
120.
120 on the euro, maybe, or maybe high teens, maybe. Yeah, you could see it. You can see a 10% move in the dollar in the next year or so.
That'd be like 95 or 90 in the dollar, something. Like
that, right? Yeah, exactly. So how does that? So that's and I agree with Stelios in terms of what he said in terms of yields. We could see US yields lower short term, and that's because of the Fed policy, which is totally misguided. But then I think longer term rates go higher. So how does that color my perception of the world? Well, it has done for a number of years now. Is you cannot fight risk assets when you have a balance sheet as bloated as the US is right now, and with interest rates still at a suboptimal level relative to where the economy and inflation is. So everything that I look at and have looked at for the last number of years has led me to want to be in risk assets and to be in assets that will be impacted by inflation in a positive way, i.e. inflation hedges. So this is the S&P, and clearly this is in an uptrend. There's nothing about this chart. This is the momentum factor ETF. Again, nothing bearish in that chart. Broker-dealer ETF, nothing bearish in that chart whatsoever. And semiconductors, okay, semiconductors have had a sell-off in the last couple of quarters, but they've found their feet again. And I think it's important to note that semiconductors are a fairly big part of the market now, and an important part of the economy as well. So if semiconductor stocks start, taking off again, that can only be good news for the stock market. And just to reiterate this point,
trying to fill a gap in the semis that it left. I think if you looked at something shorter term, you'd see.
Yes, could be. Yeah, I just think semiconductors are going higher, and I think the market's going higher. I'll come on to that. This is the semis relative to XLK with the tech ETF, right? So I think semiconductors are going to outperform everything in the next coming months.
Okay.
So
I'll be able to short NVIDIA at 165.
Yeah, I would say you're going to have a chance to do that for sure. Micron, big semi stock. I think that looks good. Don't forget this is a monthly chart. Remember, my time frames are usually a lot longer than some of the people that watch your program. Intel, I love this chart. Intel, huge RSI divergence on the monthly chart, right? Huge divergence. Made an ABC correction. And if you look really long term, this is bottoming out and it's going to run again, I think. So risk assets is where you want to be still. I don't see anything in any of the charts that I look at suggest to me that there's going to be a massive bear market anytime soon. Now, you'll get a signal when that's about to happen. And, if I come on the show in 3 months' time and say, hey, I think, the market's turned, you'll have plenty of opportunities to short because the correction will be fairly significant and probably fairly prolonged, but it's probably not going to happen until the Fed have stopped cutting, have changed course, started to raise rates again, and then the market gets hit. That's when you see it. So I don't think you'll see it until that point. So here's another risk asset, China. I've been banging on about China for the last few months as well. China stocks, I think, are about to take off or have taken off, and they've got a lot more room to run. This is the China Internet ETF. This is the China Dragons ETF.
Yeah.
All of this stuff is pointing higher to me, but it's not just stocks, right? I know you guys follow commodities a lot. This is the CRB. There's nothing bearish about this index.
No, the grains have joined the party now.
Yeah. I mean, I think you have to treat every commodity individually, but as a whole, I think commodities with other risk assets are headed higher. This is cocoa. I think I gave you this one last time I came on, right? I think we were about, I think we were just breaking out. I think we were trading around 9,000, and you had a 30% run up in that. Gold, everybody's favorite, right?
Can I ask you, do you have a view, because I'm starting to get some, I'm sure they're going to be carried with the market, but the banks, like, the XLF and banks have been leading the charge. They've held up the best when we've had little bear raids like we had in December. And, some sharply, it was, 200-point range the S&Ps were in. Is that a bullish looking chart to you?
There's nothing bearish about any of the charts I'm looking at. Nothing.
No. Okay.
Nothing.
And
it's just, I mean, I think it's Dale. It's like shooting fish in a barrel at the moment, thanks to the Fed criminals, right?
Yeah. I'm just seeing momentum divergences for the first time there.
Yeah.
We didn't have them till this week.
The thing about momentum divergences is that they can go on for a very, 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 very long time.
Oh, my P&L has learned that.
Yeah. Okay, so here's, I think I sent you this the other day, didn't I? I think it was last week, and I was trying to get a reminder about when I was coming on, which is, this is the Mag 7 ETF.
Oh, yeah.
Tell me what's bearish about that chart.
Nothing. That's why I got out of my NVIDIA puts last week and everything. So I'm looking for a melt up too. Do you have an S&P target?
I think short term, in the next month or two, I think you can easily see 64, 6,500. I think tech is probably going to lead the way, and semis are probably going to lead those. But I would not listen. I'm long of risk assets, have been for the last 4 years. I don't think there's anything out there right now to convince me to be short of the market or short of risk assets of any variety. I just don't see it. With the Fed cutting rates and with the balance sheet still bloated, there's still too much capital in the system.
So maybe you're more in like the 7,500 camp for S&Ps. There are people that are there.
Listen, I think anything is possible right now, because you have a central bank that is too easy, both in terms of its rate policy and in terms of its balance sheet. You have a president who's just come in, who is going to crank up growth and is probably going to have a fiscal policy to stimulate when it's probably not necessarily needed, but that's his way. So there is nothing getting in the way of risk assets. I don't see it, unless you get some kind of exogenous event, which a black swan you can't see, a COVID 2020, a global financial crisis, but that doesn't happen overnight.
Well, do you want to know what it's going to be?
If you know what it's going to be, it's not a black swan.
Well, I'm the only one that knows. Two other guys know.
Tell me.
So it's a gray swan, like my hair.
Okay, tell me.
That Netanyahu was here to draw up battle plans to take out Iranian nukes in the next month or so. And Iran's not going to respond by going after Israel. They're going to go for Saudi Arabia. And just like the oil shock you were talking about before, I think crude goes into the low 60s first, but then I think we're going to have an oil event in the Middle East. That's what I think.
Okay. I'm not sure about the whole Netanyahu-Israeli policy over the next coming years. Who knows? I don't get involved in politics. I think you have a rule on your show about not doing political stuff.
Well, I'm just saying what I heard President Trump say, that Iran could have everything but a nuke. Okay.
Yeah,
so
I don't get involved in politics, and I dislike politicians of every shape and size and form.
I know. But I still have to be aware of potential narratives.
You be aware of them. But Dale, you and I have both been in the market a very, very, very long time now. And we all know, or we know, that price moves ahead of narrative, not the other way around. So at the moment, everything in terms of price is telling me otherwise, is telling me there's nothing here to worry about right now. So that's how I'm positioned. And it's, it's not just stocks, it's not just commodities, it's, crypto, this is Bitcoin. I'm still long of Bitcoin. I'm still long of Bitcoin miners, right? If you can't trade Bitcoin, then trade one of the mining stocks. MicroStrategy is a relatively decent proxy. And I'll just finish off with, some of the stocks that I kind of like. This is Rich Tech Robotics. They make robots that do various chores around hotels, restaurants, and factories. I think that's going to have a very big move. Archer Aviation, they make the electric vertical takeoff and landing aircraft. This looks positive to me. ASTS.
Interesting names.
Yeah, ASTS. I mean, I focus, as you probably remember, on the mid cap names.
Yeah.
That's what we do. Mid cap US long short for Citadel and BlackRock and a couple of the big hedge funds. This is AST Space Mobile, which obviously is doing its broadband network in space, which is the next step forward in cellular communications. And then another one.
I think they're doing it here already. Forgot the carrier, but your cell is hooked up to Starlink through them.
Yeah, I'm obviously in the UK, so I don't know what you've got going on. And this, I'll just finish on SMCI.
T-Mobile.
Yeah, so I'll finish on SMCI, which has been long for a while now. I love this chart.
One blow off coming with Bitcoin.
I think, I mean, just to remember the time frame. So, this is going out probably end of 2025 is, where are we? It's probably around about there, isn't it? So yeah, plenty of room this year for more upside. Look,
do you think in terms of time? I know everything looks great. I'm looking for 6,400 too. Do you think it's it's going to be we've really, before this week, we've been in a range in both NASDAQ and S&Ps. Shouldn't it really just get going from here and stop grinding?
I think it's primed. I think it's ready, and maybe the Fed minutes tonight will give it a jolt. Look, you're right. Some of the charts look messy, and what I try and do is when I see a messy chart, and you pick any one of a number of charts,
like right? Microsoft.
That look like, yeah, exactly. So you pick any individual stock in the Mag 7, and there may or may not be a discernible pattern. So then you fall back on, okay, well, what do I look for in terms of, okay, this is the composite, right? This is the composite of all the Mag 7. That's a much cleaner looking chart to me. So trade that. Don't trade, individual names. If you can find an ETF that gives you a broad exposure and looks like a clean chart, then just go for it. The same with the same with the S&P and the NASDAQ, because I think if you look at the NDX or you look at the Dow or look at the SPX and it looks very confused, try and find a chart where the pictures are pretty. And that's what I do. I look for pretty pictures, right? Yeah. I've got a master's degree in engineering from one of the world's top universities, as Stelios knows. But I'm just a visual guy. I'm just a visual guy. I like nature, I like beautiful things in nature, I like beautiful architecture, and I like beautiful charts. So this is a picture perfect chart, right? From an Elliott wave perspective, this is the NASDAQ comp,
Yeah.
which is a much bigger index. And it's a much cleaner chart because you can see you've got from, middle of last year, you've got a wave 1 up, a wave 2 back, then you've got a big wave 3. If you draw an Elliott channel from the top of wave 1 to the top of wave 3, and then from the bottom of wave 2, the wave 4 comes in almost picture perfect at the channel, right? And then from there, you've got a delightful first wave up, second wave back, and then you've got another first wave up, second wave back. So this really is primed to go. So within the next week or two, especially if you look at the Mag 7, which I think is also basically ready to go as well, I think you've got a period of the next 4 or 5 months till the end of the quarter probably, where you should have plain sailing, right?
Yeah, maybe until April.
Yeah. Look, I'm not going to try and put a time frame on it because, as I said, there's nothing that I can see that causes me to be bearish yet. And my nickname
so why
is
even think about it?
Yeah, exactly. Don't think about it. Don't try and fight it. Don't try and be a hero and pick it up. The worst thing you can do is try and second guess the market and try and be a hero that called the top. Don't do it.
Well, I tell you, man, I had to buy a lot of puts when I saw the Stargate project in the Oval Office, and they came in and semis ripped, and it was a failing rally in NVIDIA. And then just, I guess, pure luck, deep 6. So, that's why I'm saying that even within, now this isn't a stage where you could trade. It's not a two-sided market when you get into a melt-up stage. It should lift all boats, right? But when you're in ranges, bulls and bears can make money.
All risk assets, I think, are going to continue to benefit from easy Fed policy, from a misguided rate cutting cycle. From
in April,
listen. If they get some, if they get another inflation print, which is unhelpful, then I think you'll start to see the rhetoric changing.
Yeah, I think it's already is. I mean, I hear people say maybe it's going to have to hike again.
There's no doubt in my mind that this rate cutting cycle will go down in history as a huge policy mistake. And where was I showing you that? Just go back to the go back to this chart, right?
Yeah.
Oops, sorry. Just go back to this chart.
Yeah.
The policy mistake from the late 60s to the late 70s is being repeated.
Yeah. So he's not Volcker.
It's a Fed focused on growth and not inflation, when they should be the other way around. And so, you're old enough, as am I, to remember the inflation that we had in the 70s, and it's abominable, it's despicable, because the people that can afford it least are the people that get hurt the most. The haves, the people that are wealthy and have assets and they have money to invest and they can put their money to work into inflation hedges, will be fine, by and large. But the people that don't have that fallback will be the people that are having to fork out more every month for housing, food, energy, and it's wrong.
Do you remember an author named Ravi Batra?
Yes, I think we had this conversation last time.
Oh, did we? Because I mean, you talk about wealth disparity. So I mean, it's never. He thought it was way out of whack in the 80s. You know, the Depression of 1990 was the title. So can you imagine from the 90s with all the printing and asset inflation, the disparity now must be like it was during the French Revolution.
It's horrible, and it's getting worse, and it's despicable. That's all I'm going to say. That's why my view on politicians and central bankers.
Where's your bunker?
Sadly, in the UK, we're not allowed to have guns. So the beans, bullets, and beer and bunker quadruple don't exist over here.
All right, yeah, that's right. You're on the other side. All right. Well, I tell you what, it's great insights and really interesting stock selection for this part of the market. So everyone, you know, this is recorded. So if you didn't write them down, Dale's had a great track record, not only when he's on the show, but in his trading. That's why he's managing and doing what he's doing. And you could tell why. And the main ingredient that I see in Dale is he uses a telescope, not a microscope. So another great conversation, Dale. Really appreciate it.
My pleasure, Dale.
Yeah, I hope it's a great year for you.
We had a spectacular, or I had a spectacular year last year. The long short books, long short US equity market neutral books that we run for some of the big hedge funds were up over 100%. So we had a spectacular year. I'm hoping that this year will be equally good, but I suspect that it will be more challenging as we go through the year.
Yeah. Yes. When, you know, some of the animal spirits start to run out of juice.
Exactly.
So we'll see. Always great, and appreciate you coming in and edifying our community. Thanks for paying it forward here at F.A.C.E, my trading warrior brother.
Say hi to all the gang for me. You guys do a great job, and you know, I've been around the industry a long time, and it's nice when you get to my position that you can spend time giving back and paying it forward, as you say.
Yeah. Okay. Well done. We accept the knowledge. Give me a Y if you accept Dale's knowledge today.
Just remember, Dale, I've been doing this for nearly 40 years, and I've done tens and tens of thousands of trades during that period of time. And statistically, I'm only right 62% of the time. So don't shoot me if one of my predictions is wrong.
No, that's a great hit rate, because the difference between pros and amateurs is they know how to lose.
Yeah, exactly.
So Dale Briscoe, everybody. Talk to you in the spring. How about that?
Yeah, sounds good to me, Dale. Enjoy the next few weeks and months.
All right, Dale. Thanks very much. Dale Briscoe, everyone. Dale is on LinkedIn. You know, you open to people connecting with you, saying hello.
Yeah, I've come off of X, as you know. It was just getting too much of a time constraint. So I don't do social media. I'm not selling anything, but if people want to connect, that's fine.
Okay. So there you go. You could find Dale on LinkedIn. That's a wrap. You could join the team in 14 minutes. Remember, don't just count your pips, count your blessings. Good hunting today, everyone. See you tomorrow. Tomorrow I have Ben Maldonado. And then I have a grain person coming because the grains have come out of the hole. So that's a wrap for me, and we'll see everyone tomorrow. Adios.